Good afternoon. This Thursday, December 26th. Well, grains pushing higher, corn continuing our opinions that we have been moving higher since August 27th when we projected that low at 385, and the corn was going to continue to push higher to ultimately, we think, in February, April, or May, $4.85 to $5. But in the near term, we're targeting that $4.65 to $4.69 range. And so the grain trade honoring that, pushing higher with corn above the 200-day moving average. Soybeans, again, led by explosive soybean meal, pushing to the upside. We'll show you the Argentine forecast that the market is probably getting concerned with. Remember, Argentina sells soybean meal. When you get these end of December, January, February rallies, they're not on Brazilian crops. They're almost already made. It's on the Argentine crops, and that's January and February, and the trade is getting concerned about it. But there's something that's being missed in this whole equation on soybeans that could get very interesting as we get into February. You know, with all the crying about Brazil and their financial crisis and their Brazilian real dropping like it's doing precipitously, eventually this is bullish for domestic U.S. soybeans because in the end, their currency break, which is collapsing, yes, it's allowing their beans to be cheaper than ours, but for a time being, the prosperity is going to be wanted by the workers. You're going to have rail, port, and truck strikes up the yin-yang come February when they're going to want to all piece the money because they can't survive the inflation from this economic financial crisis. This does not go just one way. It works the other way too. And so what can happen is you have Brazil with a 171 million metric ton bean crop, this record crop, and nobody to deliver to the ports or port workers that won't work. Not for a few days like they do in February annually, but maybe for a few weeks. So now the biggest supply availability comes from the U.S. So that things can get interesting. This financial crisis is not just a one-way street for the Brazilian real that makes our beans get cheaper. Our beans have been proving otherwise. Argentine forecast out through January 3rd. There is some chances of showers here in the bean growing region of Argentina. But when you look out through January 11th, once that bout of showers leaves, there's nothing out there. Here's Santa Fe. Here's Cordoba. Here's Buenos Aires. These guys will not be happy if these rain showers don't arrive here soon. So through the month of January, that to give us our bean rally. So with that said, corn and beans all higher today. Corn didn't even pause this major resistance point that we'd highlighted in the Tuesday video and Monday's newsletter. Just walked right through it. So now we are still in wave one of a 5-wave advance that should find our way up into probably the January 10th through the 12th. January 10th is a crop report. Maybe a few days afterwards could find a high. We think we're going to see lower yields again and strong demand. And we have strong demand even without China. Imagine if China steps in buying beans like they have historically in the February-March time period. This could get extremely interesting. Wave one is still in play. Wave two will obviously be shallow, but right now I think they want to build this thing above the breakout enough to wave two stays above the breakout point, and then we do another wave up. And so these, where 3 and 5 is, they could be too low. We may have a 1, 2, 3, 4, 5, something to this effect, and this number gets elevated even higher later into the spring. This could be February bears here for wave 4 in a larger wave, and then you have 5 more waves up into April and May when corn typically peaks, and maybe it's tied to problems with Argentine corn production. Remember last year the crop is cut in half because of stunt disease. Who says they've eradicated it? So corn, not as bearish as everybody wants to talk on Twitter or elsewhere. I think we've proven now that they've mostly been talking the easy talk and getting caught releasing all their grain sales down here. We only have one grain sale at 505, 25%. We're looking to make another 30% sale at 465 and even higher. So in the end, I feel sorry for the guys that made all their sales down in here. They're missing the big story on corn. Now soybeans. Let's talk soybeans today. Pushing through the blue line now, as we've learned a couple of days through, especially spiking, gets caught anyway. Maybe the trend line is what they're going to attack here near 1008, 1006. You close over 1008, this gets very interesting. But maybe we stall, pull back, regroup, then push higher. But we're recounting this thing, all because of how the continuation chart played this out. In the end, the continuation chart with spot beans did not make a new low under the August low. They held right at the trend line going back to the 2019 low. And so with that, we're back to our original theory where we had an ABCA up, and now we're doing an ABCB down, And then a 5-wave advance is going to occur in a wave C to finally complete wave 4 before an ultimate wave 5 to the downside occurs then later on into our summer, barring any decent weather. So interesting it gets. Soybean meal, the fire punch to the upside here. Major resistance at 327, 330 probably is where they'll run into something heavy if they maintain this kind of firepower. But this could be when our beans get us up to our anticipated price. That could be in the 1064, 1075 range for this punch to the upside. Then we get a wave 2 in and move on lower. But for now, we think there's upside potential on these beans that we can unload into. I know a lot of people panicked out, sold down in here. If you did, we had told you, own the board back. We think these beans have a chance, and we can get a better sale. I mean, nothing miraculous unless Brazil goes haywire into February. Then we've got $12 beans. If they can't get them out for 3 weeks, then we're the seller. Now let's take a quick look at cattle holding at the trend line support here. Wave C does not have to take out wave A when B is higher than wave 1. That's an incidental B. Now we might be making our start of our next push higher as we kind of zoom out here. We're looking for 5 waves up into a wave 3. January high. Sometimes the weather can play into this, and we have some cold weather forecasted to enter very chilly into the feedlot states here in about 2 weeks in the long-range forecast. They're trying to see something out there. That reduces the heavy gains that the cattle have been producing to help stock us with beef. This comes up short on beef supplies on inclement weather. Well, we'll probably finally get our $200 live cattle. Feeder cattle, well, they've thwarted our thoughts that maybe we're ABCing down into wave 4. Today's run was nice, but we have to get closed above the 260.5 range to finally break out. Get 2 closes above this, we might have a start of something bigger here. And this is alongside of rallying corn. Isn't that interesting? This, by the way, is a flagging formation. When they flag like this, they continue the way they entered into it. And so that's what makes 260.5 on a closing basis twice. Makes feeder cattle probably pretty exciting to the upside, and then we can target 281 to 286. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.